It's got a very strong support at 134,500. So we're coming heavy down to this support. Some people took sells. I know Mac was in sells. So that's very good.
Yo, good morning, guys.
Hey. Yeah, this is a very strong support here on GJ, 134,500. This is extremely strong.
Can you hear me?
If this breaks, we'll continue moving down. Yeah, bro, we can hear you. If GJ breaks the support, what's your target? If GJ breaks the support, you need to take a look left. So I'm looking left here, let's say on the 1 hour time frame. And what I see is that I see this wick here to the left where price broke below around London close on the 8th April, came down to and tapped 134,350. So that's going to be a good target. That's like a 20 pip range inside here. But if you look on the 4 hour, and if we break the support, it makes sense to come down to this wick here too, because 4 hour came down and tapped this area. So when a hard time frame like that taps an area, that's some like a very very important area. So you look at the price, you're like, okay, maybe 134,350 is a strong price. So we're kind of like waiting right now because there's no buys, because there's no confirmations to take buys. There's no sells because we're at support. So the only thing we can do is just wait. Looking at GJ daily, it tapped into a strong support, which was resistance there. So that's why 134,500 is a strong level. Man,
Good morning.
Hey, good morning. So there's a support confirmation here. Come up over here, and from here it's a clean candle going up to 135, 100, 135, 200. Why is it very bullish? Because if you look on the daily came up, it created a high around 27th March, 30th March, but at the end of last month, created a high, came down, we created a massive support at 132,500, came up, broke that high at the end of the last month that was created, made a new high at 135,780, came back down. This daily candle, if this closes bullish, then the support is respected around 134,500. Because if that support gets respected on, let's say, the daily time frame, then we know, okay, now there's a very high probability for price to continue moving bullish. So that can be looked at right over here. Even if you look on the 4 hour, strong support. Look at the 1 hour, 134,500 is a strong support here as well.
Yeah, so with GJ now, what I'd be looking for is, if you go back to the 30-minute, Raja, this zone here to be respected. So if you're looking to take trades, you're looking for this candle to go bullish. Your stop loss is going to be around here or over here. But as we start to move, this candle should pop up and the next candle should break above the zone. So you can actually place your stop loss maybe over here at that point. So your stop loss goes across here, so you get a better risk to reward. So that's what you're waiting for. If you're looking for a buy stop probably works above this level over here. But once again, your stop loss is very wide, so you have to be able to manage that. And your anticipation is if this breaks to the upside, you're then clearing up over to here. So your reward to your risk is imbalanced, or is in balance in that respect, so that you have a positive risk to reward. But you have to manage that. I think when you see this pop up, probably the second half hour, we may get a move. If you're watching the 15-minute candles or 5-minute candles, you can probably get an earlier entry. But I think your second half of the hour, this will probably go bullish. So that's what I'd probably be watching. But I mean, I always watch the smaller time frames too to see if we can get some information there. And you can see the 5-minute already created a support again, and we're going to break out of the consolidation range that we're in on the 5-minute. Winnie Venus. I've been speaking for the last 10 minutes. Jeez. So awkward.
Venus.
What do you think oil? I don't think anything about oil.
Yeah, I like a buy stop at 134.900. That's what I was literally looking at, because I'm thinking that depending on how this hour closes, the next hour I want a drop down again, and then I want to push up, and that next hour should be our drive up. Like, I can't see this 30-minute candle going full bullish in terms of breaking above 900, so I think there's still going to be one more pullback. That's what I'm watching right now.
Yeah, it makes sense, because like on the 1 hour, if the next 1 hour breaks above here, then there's a high possibility it's going to continue moving.
Yeah, because I've seen this before, where this 1 hour candle looks like this, the next 1 hour candle drops here, and then the following 1 hour candle does this, right? So that's what I'm conscious of. I don't want it to sit like this and then have something like this. So I would rather see something like this, so that we could get then the next candle going up. I don't like this format.
This entire area is consolidation. This is also the same area, consolidation. Once you break above there, then there's a clean traffic. It's a clean highway.
Mm-hmm.
That's our HOV lane right over here.
Well, yeah, because essentially what you'll do is this candle here, and then there'll be this candle over here. So you'll have that mirror over here. That's what I'm anticipating. So your target could be this area here. This would be an easy target for you to fill. But the thing is, when you take a trade, you also have to make sure the candles over in this area here make sense, right? There's no point of putting a buy stop here if the candle is now looking like this, because you could have a candle pops up and then drives right down. So you have to be very cognizant of how the candle is building. That's the mistake people make when they put buy stops. They automatically put a buy stop here, right? They'll put a buy stop right here, and then they'll say, okay, well, because Ted and Raja said buy stop, I put a buy stop here. It pops up here, and then it drives back down. They're like, well, what happened? Why did it fail? It's because the candle structure here did not have the support. You essentially want to see something like this. This idea here, you want it to be over here. You have to have that same sort of idea. So if we're looking for this clean traffic here, I want to see a rejection to the downside and a push to the upside. In that respect, I want to see something that looks like this. I don't want to see something that pops up and then drives back down. That's not a buy stop.
Yeah, I got a buy stop at 134.920.
Well, I closed the runner I had at 134.550, and I'm done for the day.
Beautiful.
Yeah, I'm not taking any more trades today. I was up since 4 o'clock, so I got some trades already.
Does UJ and GJ have any correlation when moving? It looks like UJ is going down. They have a correlation in the Asian session because it's influenced by the yen, but in New York and London, especially with the New York and London crossover, they don't have much correlation because UJ is influenced by the US dollar and GJ is influenced by the pound. So if someone's out there trying to take a trade on GJ based on UJ, I think you're gonna have a very bad time.
You can probably move your buy stop probably now to 800. Because I'm thinking my thought process is this consolidation range is happening over here, and as soon as we pop out of here, we're on our way. Yeah.
Yeah, that makes more sense. Closer.
Yeah, it just allows us to get a better entry. Mind you, if this support breaks, what you're looking for with a break in support here is you're looking for this. You're looking for a candle in here to break, and then this candle to continue. So you wouldn't want to take a sell over in this spot over here because we're in this range. You'd be looking for a break here where we have rejection over at the upside, and then the next candle over here would probably be your safe candle, because you still have this area here to play with, which would be over here, and this too. So you're looking for technically the candle here that rejects off of 134.550 to drive back down to 350 at that point. So you need to be very careful when you're taking, if you're going to take a sell, I would really wait till this candle breaks out of that range. And if this candle just goes straight to here, then you miss the trade. There's nothing you can do. You have to get used to that as well. When you anticipate opportunities, you're anticipating safe opportunities. You're not trying to say, well, what if this candle just continues to go down? If it just continues to go down, then there was no opportunity. But what I'm clearly looking for is rejection here and then a drive. So I want to see that rejection so that I can safely assume that orders were taken at the top part of that candle to drive us down to the bottom part. I don't care if this candle drives all the way down right now in the next, whatever, 30 minutes. That's not a trade I would ever take anyways. That's market movement. Get used to it. You have to accept the fact that you did that. I mean, you can, if you want to counter that, you can put a sell stop over here, drive it down to here. But I mean, even then still, you have this wick area here to contend with. So is it really that safe, right? So you really want to look at patterns on the candles that are easy moves, right? So if we examine this area over here, what's easy about it? You can see rejections to the downside, rejections to the downside, rejection to the downside, and straight bullish movement up, right? Over here, easy moves, right? Rejection to the upside, rejection to the upside, rejection to the upside, clear move down. That's what you have to get used to trading. This is not trading. This is not trading. Please, 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 for the love of your trading account, look at opportunities where you're like, hey, this would have been a great, easy, bullish movement up. So where can I find that again? Hey, this is a great movement down. Where can I find that again? And look for those opportunities. This over here is account death, right? So if you want to blow your account blowing setup. There you go. That's what you're looking for. That's an account blowing setup. And also over here, this is an account blowing setup. So if you want to trade with candles that look like this over here, this is an account blowing setup. So trade within that area and keep buying and selling. And then you will have a lot of accounts blown, and then you will realize that after you blow your account, this setup over here then starts to do this. Drops, drops, and then you're like, oh, look, it finally went down. And it's like, yeah, but you lost all your money over here trying to be a hero when you could have had free money over here. I mean, just use logical sense. Just be smart with your money. If you don't see what you want to see in the market, don't take a trade. Who cares? If this candle here drops all the way down to here, oh well. That's life, right? You should have got in over here. How would you have got in over there? You wake up earlier. You set your targets up earlier. You can't turn around and complain now that this goes all the way down and you didn't get an entry. There's no retest, nothing. You miss it. It's too bad.
Yeah, that's what I was looking for too. Like, I mean, if it just breaks support, it keeps heading down. There's no way you can. There's like nothing, no confirmation to take the trade at all.
How do we anticipate those areas of ranges? Well, all you do in this situation here is you look to the left and you look to the left and you look to the left, right? So as an example, when we're looking for our bias going for buys, we can see we have clean traffic all the way across. Here, we can see we have consolidation. So more than likely, using our experience and our knowledge and our confidence, we could clearly say that over in this area here, we're going to have consolidation, right? Because we're using probability to say that this will be consolidation, this will be our breakout, and this will be our breakout. Because why on the left, we can see clean moves where we have the breakout areas, and in the consolidation areas, we see a lot of traffic. So that's what you're looking for at that point, and you're looking to say, hey, once we break out of that consolidation, then we're getting ready to move out of the way. And what we do, once again, just like we talk about every morning, what do our higher time frames show? If our higher time frames are moving in the same direction, we look for the same position in our lower time frames, because then we know that we're on the right path. Same thing every day. I wonder how many people here are actually profitable with this strategy, or you're all just waiting for a single signal. Yeah, I always wonder how many people here are profitable too. It keeps me up at night. This is going to be the highlight reel of we wait for 2 hours and we catch the trade and it takes 5 minutes.
Yeah.
Like a whole speech.
There you go. Someone's very profitable in the chat. That's good to hear. Oh, someone else is profitable. So now here's a perfect example where if you want to be an advanced trader here, you would say that this is the bottom of my range. I will place a stop here and I will take buys in this area here with no candle confirmation on the basis that I believe we're going up. But I'm willing to accept that there's a stop here and I could get stopped out very fast multiple times. So if you want to be a hero and trade within this range, that's how you'd be trading that range, because we're at the bottom portion of this consolidation. So there's opportunity to buy from the bottom of the range to get up. Myself personally, I prefer to take easy caveman trades where I see this and I know that we can go in and out and in and out, in and out. And then what I look at is I look at over to the left and over to the left. And I say, well, I'm a caveman and I want a very, very easy win. So I'm going to wait for candles to print like this for easy wins. Even though other people can take trades down in this area here and be like, oh, well, I bought the bottom and I rode it all the way up. That's good. I'm happy for a lot of those people. But for me, I like nice, easy trades where the candle just goes up and I don't have to worry about anything, and my stop loss is here and my take profit is up over here. So I will wait. I'm very patient. There's never been a point in my trading career where I've made trading difficult. I just look for the same thing over and over again. I'm looking for this right over here. And the great thing about looking for that is I know I have two opportunities. I have that opportunity and then eventually this opportunity, and I still have more opportunity over up at the top. So I have like 3 or 4 opportunities to catch this trade. And if I don't catch it on 30-minute, I can move into the 15-minute and the 5-minute to even figure out how to get into this candle over here when it peers over here. That's the best part about the caveman strategy. Is the caveman strategy says when every single one of your time frames are moving in the same direction, chances are wherever you take a trade, it's going to move in that direction.
The gold pips are starting to tighten up. Spreads are starting to get tighter.
Yeah, it's pretty good.
Yeah, I noticed with gold now, it's nicer. It's getting back to normal. It would have been nice if they had done that at 1689, so we could have got an entry.
Yeah, I was looking at for 1706 area, but it ain't came.
I didn't trade anything yesterday. I missed gold on the move up. I missed gold at 1689. I missed a whole bunch. Just sucks. Oh well. Because that weekly's printed a new high. The monthly now on gold, I mean, you have a nice move up to 770 if we do continue, but I think first stop is like 1750. But I don't know how we're going to get there because there's no structure on the smaller time frames really. And it's weird because the Dow is now heading up again. The futures market is up. All this optimism has come back, and I don't know where it's come from. The whole market's in a big mess.
The market doesn't make any sense because I wanted to scale in some more with my ETF index funds, and I was like, it just doesn't make any sense because now you're potentially going to have all these Airbnb homes that's been purchased with mortgages are going to hit the market pretty soon, and then the small business is running out of cash. So
that's what I mean. Like the market's setting up for a massive dump. Like that's what I was last night. I was watching that Bachelor show with the music people. They were like trying to get together. Musicians are trying to find love.
Find love.
And I was thinking about that. I was watching the show. I'm like, this doesn't make any sense because the market's rallying right now, and we have all these problems in the United States with people dying, isolation, and stuff like that. Like, where is this optimism coming from? And it's just pure speculation at this point. And I literally was sitting there for 15 minutes trying to wrap my head around this. And then as I started to do research, I was sitting there. This is worse than 2008.
Way worse. Because there's not a history that the country has ever been shut down. And the country's airlines are not, there's no airlines flying out. There's barely any hotels open. Business, the only thing that's pretty much open is groceries and hospitals. So, and a couple food restaurants. So,
if you look at, I know some people were saying you don't understand why certain businesses and certain things are not crashing the way they're supposed to. If you look at the stimulus packages that have been announced by Trump, he announced $2 trillion stimulus package, but he said that $2.8 billion were going to go into buying junk ETF bonds.
Oh shit! Okay. So basically, what he did was take $2 trillion and put it into a fucking slot machine.
So he bought a credit exchange fund, a credit ETF fund called HYG, and that fund is basically made up of Uber, Netflix. It's crazy. But yeah, he's basically bought a bunch of stocks and they're all inflating.
Okay.
Okay.
Yeah.
I thought it was what I thought you were gonna tell what's the credit saying? Is it Sue something, Cassie Sue or something like that, or forgot what the name of it was. But I was looking at it the other day. I was like, this shit doesn't make any sense. It's going up. But, okay. Good. Thanks for the information. And also that stimulus package, even for small business, like no banks want to touch it right now, give any business any loans because like there's like a weird wording in there that no one wants to give out loans because it seems like the government won't take care of those loans if anything happens.
What's happening in the UK, Cavan, sorry, is basically the Chancellor came out and said that all of these loans were available. And grants were available for small businesses up to like a certain amount. So then they said, but you have to go to your bank and you have to get it from your bank. So they passed the book to the banks, and the banks taking all the risks now. So then what the banks did is the banks passed it onto the customers and said, well, if you want a loan above, let's say 50K, you got to put your house up or you got to put your place of business up and there's like a thing going on right now. Especially with Barclays Bank, because that's not what the government said. But the government aren't doing anything because the bank's taking all the risk, not the government. Because the reason why is because like it's uncertain times, and the government doesn't know if people can pay back the loans because they're uncertain that the economy will rebound the same way coming out of this in like a V shape, what Trump and Boris Johnson have been talking about. So if the V shape is kind of not really expected and the V turns into an N, then the risk is basically is placed on the government because the government has to kind of cover the other side of all those loans that they've talked about. Whereas if they pass that on to the banks now realize that this V could turn into an N. So what we have to do is we have to figure out a way to kind of recoup whatever we lose. Which is shady, really, but it just shows that the economy is like what Ted's saying. They're setting up for a big crash.
Yeah, that makes sense. This could be the liquidity grab that the market is gearing up for to go lower.
I still think the average public member still got their head in the sand.
Yes.
Yeah.
For the severity of the actual problem,
Yes.
I spoke about when I think it was in one of the things I posted on my Instagram story that when we approach like a recession, stock markets usually correct from their recent highs by one standard deviation, which is like 56%. And we've only corrected 30% and we've bounced up from that. So it's like 20% now. So if we're going to go into a recession, which all economic indicators point to that, every kind of indicator you could think of from every industry, every sector points to a recession, and even to a quite bad depression, then usually stock market prices correct by 2 standard deviations, which is usually around 76%. So that would bring the stock market to like 13,000, the Dow Jones I'm talking. So we have a long way to go.
Okay.
I was looking.
Hey Ted, go ahead.
Go ahead, Doran.
Hey, did you see that Chase Bank tightened up on potential?
Yeah.
What do you think about that?
They moved it up from 5% to 20%, and you need a FICO score of 700. I mean that's pretty standard in Canada right now. So I think that's a benefit for you guys in terms of stability. But then what does that do to your housing market? Because I don't know how the U.S. housing market is in terms of purchasing power. That's the one thing that I've always looked at. Like in the U.S., it's such a wide dynamic of purchasing power, right? Like what I mean by that is, say for example, you go to Atlanta, right? You go into the suburbs of Atlanta, you can buy like a 6,000 square foot home for like $500,000, right? Yeah. Whereas if you go into New York City, obviously you're not getting that, but Atlanta is still a pretty big hub when it comes to being a metropolis in terms of, you know, economy and things of that nature. Same thing if you look at like Houston or the Dallas area, right? So that's where I'm always confused. Whereas in Canada, we have three major hubs. We have Toronto, Montreal, and Vancouver. That's sort of our pegging, like that's our benchmark when we look at housing. And that's the most expensive places to live. Whereas in the States, you guys are so spread out in terms of diversification. Like obviously New York and LA are, you know, expensive places to live, but they're not the only places where you do business. Whereas in Canada, the major cities have the cities align with the real estate market, if that makes sense, right? Like Toronto's very expensive because it's a hub for business, whereas down in the States you guys have many more hubs of business, and real estate is still relatively affordable there, if that makes sense.
Yeah, that makes sense.
Yeah, because like I mean, if you look, like if you go to Florida and you go to Miami, you can live 30 minutes outside of Miami, and you're still living at a decent, you know, you have a decent property and it's a decent price, right? Whereas in Toronto, if you're 30 minutes outside of the city in Toronto, you're still paying a 1.1 for a decent house, 1.1 million.
Okay.
So that's where I don't know if this 20% down payment request will change that landscape, because, you know, like say for example, you're buying a house in Florida, you know, maybe you spend $250,000, right, or $300,000 on a house. You put down 5%, you're looking at $15,000. Now you're putting down 20%. Now suddenly you're in a little bit more at that point, right?
Yeah. So you think it will help the housing market as far as what you saying is stabilizing the price, or?
I think what it'll do is it'll correct the people that can't afford homes. Like it'll readjust everything, right? Like, you know, where people bought homes previously with 5% down. So, you know, if you bought a $300,000 home, you're looking at cost you $15,000. Now essentially it costs you $60,000. It changes the dynamic now, because it brings more stability in the sense that you have to be a little bit more serious about a home purchase than you were previously, right? You know, we're $15,000 down. Yeah, I mean, if you saved for McDonald's for a few years, you'd have $15,000. Whereas now, you know, working at McDonald's might not get you that house anymore.
Okay.
Is McDonald's still open over there? Because it's closed here. You wouldn't make a penny.
It depends on the area. It depends on the area.
It's all drive-through now and delivery.
We don't eat McDonald's, man. We eat Chick-fil-A. We don't eat McDonald's. We eat Chick-fil-A, man. You guys don't have Chick-fil-A in UK? Oh man! Once they introduce Chick-fil-A, man, you guys will never go to McDonald's.
You guys don't have Nando's, right?
No.
Yeah, see, Nando's shits on all of them, and it's healthier.
So I removed my buy stops. I got in a GJ buy over here.
Oh, to break up the hourly candle. The 30 minutes.
Yeah, I saw that too. 15-minute candle started moving nice. My buy stop's still sitting.
Yep. The stop is below the current 30-minute candle, so I think it should continue moving bullish. Yeah, because if this starts closing bullish, the 30-minute, it broke the high of the previous 30-minute candle, so I took an entry. And if it keeps closing bullish, then the volume from New York Open should push GJ out of this resistance and continue moving up.
That is correct.
Yes, sir.
And the hour candle now has gone bullish, so that's a very good sign.
I had a buy limit. I didn't even know I had it on, and it got activated.
hoping next 30 minutes. Yeah, I think like my whole idea is that since this 30-minute candle is closing bullish, it's closing above the previous 30-minute candle. It's going to close in like 12 minutes here. So if it remains closing bullish, the next New York Open should lift us up above 134.900, which is why the stop is below this 30-minute candle, because if the next candle starts coming down, it should respect this 30-minute low if it's going to continue up. So we're basically, this is resistance here. It is an early aggressive entry, but it's based on the fact that it broke the high of the previous candle. And like, you know, when you have zones in the market, your zones only get broken when when markets open, when markets close, news, and some special events, right? So the only thing happening right now is that we're going to get New York Open. So, you know, based on the fact that New York Open might push it through. So
yeah, hopefully we'll get like a nice little push. Poof.
Yeah, I think you might get the first 5-minute candle to push to get the momentum from this previous hour, and then it'll pull back again. Those wicks are very deadly on the hour. They're all lining up together, the last 3-hour candles.
Yeah.
It's scary.
It looks scary.
Ted, have I entered? Yes, I had a buy stop at 134.850, which got slipped to 857.
how come you entered a buy in a range? Well, once this candle was starting to break the high of the 30-minute candle, I entered a buy, anticipating it's going to continue moving up. But as it's coming down over here, I just got out of my position right here. So I took a loss right here. I closed before it hit my stop. Because, you know, there's like 6 minutes left, and for it to continuing up over here, it seems very highly unlikely. So it's better to just get out and just wait longer.
Yeah, look at that. Look at this 5 minute.
Yeah, see, now it's closing where I wanted it to close before.
Because they heard you on the stream, man.
Yeah. Now it's closing exactly where I wanted it to close, and the next New York Open candle is just going poof.
Yeah. That was quite the seesaw battle there. I was in rough waters, but now we're back to
calm waters.
Yeah.
Back to the swamp.
Gotta wait for it to close.
I was gonna say you still got a minute yet. Calm yourself.
No, it's not. It's not. We're not out yet. So
yeah.
I think that this 5-minute candle that popped up was probably my exit to get out without getting damaged too much. I'm gonna now at 8 o'clock. I'm gonna see if we can get a quick spike up and I can get out at like break even. If it doesn't start to plow up before this minute close.
You were like 10 pips off of break even?
Yeah, now I'm 10 pips. I was 5 pips just a second ago. Oh, there we go.
Hey, it's gonna get there.
This chart here, I mean, you have potential entry for sells and confirmation for buys, so I don't know what's going on over here.
Yeah, I just closed.
Oh, okay. Yeah, that's a really strong resistance.
Yep, I'm out. I lost 5 pips. Okay.
That's chilling. Better than 10.
This New York Open volume should break this thing now.
Oh. Preach.
Trust me, I was thinking the same.
Yeah, because we closed bullish here, closed above, broke the high of the previous 30-minute candle. So it just makes sense. It just wouldn't make sense for it to not go above resistance now.
Oh, I know. We all got in early, that's all. Yeah. I'm not taking another trade.
Like, the higher probability is it to go bullish.
100%.
Oh, wow. Look at that.
Good morning.
I just don't like the way that it's closed with in the higher time frames. I think
like
that
doji kind of.
Yeah, there's still more indecision there.
Potentially.
But I do agree on the smaller time frames, us going to like break 900 and then back up to 135, 100. But it's not tradable for me. Let's put it that way. I see it happening, but I can't figure out a way to do it. My trade that I entered previously was my entry that I thought I would get there with. I can't do it now. I'm not going to try.
Yeah. I mean, even on 5 minutes, it just looks rough.
Mm-hmm.
It's just, yeah.
Chances are it's going to get there. I'm a betting man. I'll bet $100,000 that it'll get there. How it's going to get there, I don't know, because I can't find an entry.
With this 30-minute candle.
Yeah, but
with this 30-minute candle, it's going to get there.
It's hard because where do you get an entry? It's like the 5-minute candle. Like you would have had to literally get in right at 8 a.m. and hope that 5-minute candle held support.
Somebody owes someone $100,000.
People here are trying to sell GJ. I think you should sell GJ once you have candles closing bearish, not bullish.
Yeah, that's trading 101.
People in the YouTube stream are just selling GJ and just, I don't know.
Yeah, so now it's going to go to 900, and I exited my trade in a loss.
Yeah, I was just going to say. Yeah, well done. Good call. Well,
yeah, but look at it in the positive way that it was 5 pips instead of 10.
Yeah, exactly. No, I don't. I'm not concerned. I just, if we had got this kind of move in the last 15-minute candle, I would have been more happy, right? But
that's what you were expecting. So in the last 10 minutes or so, yeah. But you kind of didn't do nothing.
Nope.
It's like I said, that area is very, very tough to break, that 900. And we should break it with the New York Open. Like right now, the way that the USA Open started, we should have popped, but we didn't. So it's all right. I'm gonna stick in that range. But now here's the perfect opportunity now. So now you know buy stops above this area are going to be awesome. And then basically sell stops below 134, 557. So that's basically the easy part now of taking a buy to the upside is we've seen the rejections here, 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 and here. So now you know that any sort of buy above this level over here should be very clean. And what you'll look for is you'll basically, once again, look for the candle that will break. It'll probably pop into that range and then it'll pop up. So that's what you're looking for now on your smaller time frames. I wouldn't be taking entries anywhere over here. I'd be waiting for a candle now to dip and then reject from this zone. So what's happening right now is we're printing a zone right over here. So what I want to see is I want to see a rejection and then drive up. I won't take trades in this area. We tried and it failed because we were anticipating it to go up. Now it's more of the fact that once we reject this and then break up, that's your trade at that point. This here is not a trade. It's going to bounce. And even if it bounces to this area here, you don't know for sure 100% it's going to break. You rather wait for the next candle to push up. Because we tried over here in this range to say, hey, if we break that range, we got a really good entry. But if it didn't break, nothing going on.
It's similar this morning. We didn't get the volume push that I expected in London. It's pretty slow.
Ooh, very nice.
Ted, did I hear you correctly in saying that you wanted it to close above the range?
Well, yeah, I mean, the idea, I mean, you can see if we're looking to the future and we're trying to have a crystal ball, you can see that this is starting to try and print a zone, right? Because we keep rejecting that area. So this was a zone here. So all that's happening right now is we're bouncing from that zone to this zone, but it's very tight, but our overall range is very wide. But within this microcosm, we see that we're in that tight range. So if we're anticipating that this is now going to break up, we would probably see us dip a little bit below that zone to the left. And what ends up happening is you get this wick that looks like this, as if we're trying to go down, but we don't go down. And then that drives us through that area. And that's where now you'll see probably the next candle do the same thing. But it just, we're rejecting so hard off this area. There's no point of trying to beat yourself up taking multiple trades there. The idea is wait to see what happens over on the right side and see how candles form over here, and then anticipate the play. So here's the breakdown and the rationale of what happened. We anticipated pre-New York on the way to go up. It didn't work. So we got stopped out. Some people made money, some people broke even, some people took a loss. You can't go back at it just as New York opened because we don't have enough information. Now what you're doing is you're breaking your session down into two stages. You can break into three stages, right? You have your pre-New York, you have your USA open, right? And then you have NYSE, right? So if these ideas, if this idea fails, we cross it out. If this idea fails, we cross it out. Now we're over here to like plan 3. We have to then adjust for that. Those are the ways that you should be marking up your sessions, because then and it's exactly what Rakil did, is he's like, okay, pre-New York, I believe that we're going to go bullish, and if we don't break, or like if we hold this level, the New York candle open or the USA open should push us through to this level. So we waited, it didn't break up, so we closed. The USA open started, it didn't break up, and it closed. So now you have to sit and wait again. Like this is part of trading. You have to wait. Whereas I've looked and we've failed twice already in my mind, those two ideas in my head of how I break up my session. So really, I'm not looking for another trade. It's very difficult. I would have to see very, very strong candle formations to then look to take a buy at that point, because the structure that we were looking at on the hour and the 30-minute was conducive to the fact that we should break up, but we didn't get that breakup. So then obviously there's something wrong, or there's something that's not happening in the market. So I'm not going to force it at that point, if that makes sense.
It makes sense. Thank you.
No problem. Right, because this is your playbook, right? This is the session that you're trading in. You're like an athlete in a game or a coach in a game. You know your game has 4 quarters or 9 innings or whatever, 2 halves, whatever it is. When you break up your session into that game, you have to coach yourself through those different periods of the game to make sure that you are able to then say, okay, this failed here, this was successful here, this failed here, this was successful here, and manage yourself accordingly throughout the entire game. Because at 9:30, 10 o'clock a.m. Eastern, the game's over. You've coached the entire game. We tried buys here, we tried sells here, we tried buys there, we tried sells here. The game is over, right? This is what you're doing. You're running your playbook every day from 6:30 a.m. till 10 o'clock or 9:30 or whenever you finish trading. That's your playbook. So you have to manage yourself as if you're coaching a team, and that's what you're doing. You know there's certain volume pushes at certain times. You know how certain pairs move, the dynamics of those pairs, how fast they move, how quickly they move up and down, how they act in ranges, things of that nature. You have to apply that knowledge and then execute a play at that point.
All right, thanks.
Okay, we got some upper and
Okay, what's this? Took a buy on EJ. Trapping an entry, 30-minute book to have the previous candles. So you're anticipating this to break this area here, just like I did on GJ, and fail. Yeah, that'll look good if it breaks above 117,700. That'll look good to continue going up. What's this? Gold. Goldie gold. Good old gold. Waiting for break and close above. Waiting for break, close, and support created take buys. Above 1724. Yeah, gold was about to break above here, and people got excited in the YouTube chat. Just like I got excited on GJ buys. So yeah, I mean, if it breaks it, then yeah, we're going further up.
If this breaks it,
Probably gonna fill this wick over here, 1727, 30, 40 pips over.
wow, I haven't heard it breaks it in a minute.
I still believe this GJ is gonna continue up, especially when the 15 minutes here about to close bullish in 2 minutes. And this New York volume should continue pushing it bullish.
Let's see.
Yeah, I mean it's
You only took one trade today, though, right?
me. No, I had 2 trades. I had 2 buys and I closed them both in the losses. Yeah. So you know, GJ will continue over here. I re-entered earlier too, so this would be the move that we've been waiting for the whole morning.
For the last 2 hours and a half.
I don't trust it. I don't trust it.
If this current 4-hour doesn't manage to fill the previous wick, is the next 4-hour most likely to fill the wick, or is resistance not playing a big role? I think the resistance is going to play a big role, because for the 4-hour to fill the wick, you want the smaller time frames to break above this area, just like here on GJ. You want these time frames to break above 134, 880, 900 to continue going up. Same thing. Oh, gold actually broke it. Yeah, I think it's going to fill the wick. Oh,
I was talking to Ted last night, and I was saying to him that I want a retest, and this was before it broke up, before 1700. So I said I want a retest of 1700 before a buy. But if you go to the 15-minute, you'll see that there's been 2 liquidity grabs, and resistance was actually at 1720. There was a liquidity grab initially to like 1725. Up, and then it came down to 1709, and they went back up to 1725 again. But actual resistance, where it's been respecting and touching the most, is 1720, and support is at like 1717. So then if you go to the daily, that basically is the bottom wick of this daily candle. And so what should happen is, with more liquidity coming in, is this daily should continue up higher past 1725. I don't know where it's going to go, but when I've got my profit, I'll close.
okay, what's this? GP CAD. Retest. Continuation up. Yep, I like this. It's trending. It's pricing breakable. This resistance form support. Yeah, let's take a look here. Take a look at GPCAD. That's strong. Yeah, I think all pound pairs, GPCAD, GJ, they're all approaching some sort of resistances here. CAD is weak. Weakness in CAD will push GPCAD further up.
Just like for people that are wondering why gold's moving the way it is, like a little bit of fundamental context, is when there's periods of stimulation, fiscal policy from the US government, what you get is, you get like a kind of opposites. So there's a lot of fear in the markets right now, especially because it's like the boy who cried wolf with Trump. He's saying a lot of stuff regarding reopening the economy and saying stuff with oil. And if you look into these types of things, these scenarios, what he's saying isn't true. He's just trying to create kind of excitement in the markets and move prices. So a lot of people kind of anticipate that. And so you have to realize that on the metals side of things, they're kind of a hedge against currency. because gold and silver, no liabilities can be held against gold and silver. So with fear in the markets and with the kind of margin calls and liquidity already being finished now, as what Ted was saying with regarding to the spreads increasing, what you're seeing now is you're seeing people get into gold as a leading indicator of fear, basically. So that's kind of fundamentally why. Another reason is because of emerging markets in Asia. A lot of those guys, a lot of Asian countries kind of, they sell oil, and all oil is sold in the US dollar. That's what the reserve currency of oil is. It's called the petrodollar. So what that means is when you sell oil, you have to have a reserve currency or like an amount as a cushion in US dollars. But because there's no oil selling going on, because nobody needs oil, there's too much. Well, a lot of these countries, they don't have enough dollars. So what they've had to do is they've sold the gold holdings. But as well, it hasn't happened yet. But as the oil price starts to stabilize, and as the US dollar is putting more, as the US government is putting more US dollars into the economy, what you're seeing then is these emerging markets are starting to get back into gold as a hedge now against the oil prices, because they've already sold the gold, right? So now they've got more liquidity. The stock markets in those countries are starting to stabilize a little bit, and you're seeing that these emerging markets in Asia, these economies, are now just starting to prolong the price of gold, and that's why you're seeing a big bull run on gold right now. It should continue up, I hope.
That's good beauty.
Yeah, and then silver's like a really good one right now, but you have to be careful with silver because there's like one bank that controls all the silver, and that's JP Morgan. And the last few years, they've already been kind of penalized. They've been charged. Well, they've been charged, but they haven't been sentenced. With regards to like precious metals manipulation. They've been charged with that, like I think 6 different executives of the precious metals trading floor. So you have to be careful with silver. But when gold goes into a bull run, silver outperforms gold. And then you have to look into the gold and silver ratio historically, and you can kind of see what kind of price targets are possible with silver. With gold, if you look on, I've got a picture here actually. I'll try and figure out a way to send it. But the 8 biggest central banks in the world, they forecast what they're looking for gold to hit this year. It's called the Global Central Bank Assets versus Gold, and it's the 8 biggest central banks, and their target for gold this year is 2,400. So I'll send that over, and you guys can make of that what you will.
Yeah, me neither.
Are you going to re-enter if it closes above 900?
Yes.
Oh, no. Not me. Well, I don't know about me.
See, it made its first move into 134,900. So if it starts to come back up again, then I think it's gonna be a better opportunity to take a buy and then go up.
Bye.
Yeah.
There were a lot of people in cells in the YouTube chat when the candles were bullish. So scary.
I like fading the YouTube chat. GJ's a sell, guys. Okay, go for it.
I mean, if the candles start to close bearish, then I would say yeah, for sure.
Agree. I mean, that's the biggest thing is trade what you see, not what you think. Like, don't be a hero. Like, we explained this whole move right here. Where is it here? Clean move, and surprise, what's happening? Like, I mean, it doesn't take a genius to figure this shit out. Like, people just have to realize that, you know, you look at probability and understand that all what you're doing is a financial gamble within risk management. And the sooner you realize that, the better off you're going to be. And be confident in the fact that, yeah, if this is how the market's going to move the majority of time, you're going to make money the majority of time. Don't be surprised that the market did what it did again. Like, don't be in that shock. I mean, it doesn't make sense for you to be in a shock that, gold's moving up or GJ's moving up. You're supposed to win. You've worked hard enough for you to execute and take entries and make money. Like, why would you discount your information and your knowledge now? This is where you should be the most confident. When you've seen stuff happen over and over again, you should be attacking and be happy, and just at the same point manage your risk, obviously, but don't turn around and try and defeat yourself that way. In hindsight, it's easy to read why did you take minus 5 pips and bash others. I didn't bash anybody. I said that the idea didn't execute according to what I wanted it to do at that particular time, so that's why I closed. But I didn't want anyone taking sells. We talked about where you take sells. You're taking sells below this area here. I mean, Michael Knight, I think you have to go back and rewatch the stream, and nobody bashed anybody. We just said you're in a range and you shouldn't be trying to take sells in a range. We're looking for buys because we're trying to break to the upside. I think there's a little bit of anger in the YouTube chat because they don't know how to understand what we're doing.